Hello everyone, this is Juan Sarmiento and today is Friday, February the 18th. Okay, so first of all, so far this year we have made close to $8,000. We are now over the $100 mark, which means we have double our money since we started here. And so what I'm going to do next, I don't think we need to enter new trades, and if we were, the problem would be that if you look at the VIX, let me just show you here. The volatility index is in the high range. This is a weekly chart. It has been higher, but regularly you think of a 30 big VIX to be high. Okay, so we wouldn't be entering new trades because of that. We would be looking to take profits. Okay, that's very important. Okay, let me just quickly go through the indices. This is the S&P Mini, E-mini futures, as you can see, and you can see that we have had a failure to exceed the Ichimoku cloud, so we are definitely on a bear market. The question will be, are we going to exceed the low here? Maybe not, because, well, who knows? The stochastic is pointing down, but it seems like it's already in the getting to the oversold area. But we'll have to see. Okay, it is, I would say that the next support area here is here, the previous low. You can also look at the previous history of the market, and for example, this is a strong point and it matches right here and this end, May last year, 2001, would be a support area. And if we draw a line from there, right there, you can see that it's in the same region. So that makes it a strong point from which the market could bounce. Okay, so even when that happens, then we presumably we would be out of our positions, or at least make them, we would have taken our profits already. Okay, now let's go through them because we may have some expiring. Okay, let's start with AXP. Click on it, go to the Analyze tab, and this is very bullish, but even though it's bullish, the fact that there's volatility increasing makes my trade positive. Look at that. The strike price here of my options is 185, and we are trading at $10 more. If you take a look at a quick chart here, let me look for a good chart here. Yeah, it has gone up, and this is my style of trading. When the earnings is, the stock goes up on earnings and the volatility drops down, chances are the stock will go higher, and this is how you make your money on the way up. And now volatility will begin to pick up, and if the stock goes down, volatility will pick up, and then we can make money on that. But as of right now, I don't think I need to change anything. Okay, presumably if the market goes down to the cone here, we could make additional money. If the stock keeps on cracking up, we could make money on that. If the stock goes below, let's say 175, volatility presumably will go up, and then we can make money, additional money. Okay, for now, let's leave that alone. Let's go to the next, Juniper, and let me delete this existing. Okay, here's where we are. Go to the Monitor tab and select Juniper here. Okay, if you want to see the trade, here we have, it's just a single trade. So that means that what we see here is a negative, is a loss of $479. That could change though, so we are going to stay here. Presumably, if the volatility rises, then we could make additional money. Obviously, the stock reported earnings in jump, and that's why I found it attractive. But right now it looks like a loser, but if it goes a little higher, it could land here in my cone. If it collapses, then volatility might go up. It's a very low volatility. Look at the chart, the VIX here, the implied volatility is low, at the low range for the year, so that's good. Okay, so we don't change anything. Let's go to TER. Okay, we had this stock going down significantly. Let's take a look at the chart. Okay, looks like we entered the trade. Our strike price was 135. As the stock was going up, I rolled them up, and you can see 160, 170 for the call. Then the stock went down, and I rolled them down to 110, and that's why we have so many different legs to this trade. Now, 18th of February, that's today, so that means we need to do something. Let's go to the monitor tab. Okay, so there's a lot of activity here. I don't know if we're making money or not, to be honest. It looks like we are making money, but this is back from October, so far this year, yeah, good. We are making money, and I presume we did. Okay, so I would have to, the way to do this is you go out, export this entire set, export to file, and just essentially save this to the desktop, and then you can calculate how much money you have actually put in the trade. I'm going to save it as a web page and name it TER, and then go back to it and see if it's a loser or a winner. Okay, and then you roll it over. To be honest, I think it is a winner because we rolled it up and up and up as it was going up. You see this? That was a roll up. That was another roll up, and then a roll down on the put side. So what do I do now? Well, we have to roll the calls, and we can make it to March, and the puts. Just these two trades, okay? If I were to roll the calls, analyze rolling, like that, we get 52 cents for the two. So 52 cents times 2 is $1.04 times 100 is $104 for that. And on the put side, we would roll the 35. You know what? Let me just delete that. Let me delete that, because we don't have to do that, considering that this call here, let me just delete everything and show you. This call here is about to expire worthless, so we don't really need to buy it back with just a couple of hours to go at 135 and the stock is trading 113. It's just no bloody way it's going to go above 135. So we're just simply going to sell. Analyze rolling. But think about it again, we have only 2 of those calls. See that? 2. And then we have the other 2 are 160 and 170. So we do need to do the rollover as I proposed. What I was thinking is that I could just simply sell the additional calls, but we can't do that because then it would require additional money, because these calls are so far up, they wouldn't cover me very well. So let's just do that like this, as I proposed originally. We are closing this call and sell the March ones. We do this similar thing with the put side, analyze rolling. and we are closing the February and opening the March puts. Okay, in this case we do have to do it this way because we're in the money. We can't really have, we need to close the February. We're forced to close the February because it's in the money. Let's confirm and send. And then once those get filled, we have a new trade. In essence, we move him to March. Okay, let's go to UPS. And we have a similar problem here. Okay. Let me just show you. It looks like we have two mixed trades. Okay. We have this 210, 210, 210, 210. Okay, so that's part of the trade, but obviously when it was going up, I rolled it up to 230. And on the put side, I roll it down to 190. Okay, so that's one part of the trade, and you can see that it's right there in the cone, and so that's great because now we can just simply roll it over, but we have the March. Okay, so I'm gonna roll it to March, presumably, analyze rolling. Oh, we can roll it to, let's say, March the 11th. Okay, that sounds good. And look at how much money we get, almost $9 there. And the resulting trade looks like this, like a neutral trade, slightly negative. So let's just do that, confirm and send. Meanwhile, we have the 220s right there. That's the 220s. And these are expiring March 18th, so we can leave those alone, okay? We are adjusting only the ones that expire on the, essentially two trades is what we have here. Makes it really complicated, but you have to be able to determine what is your trade. Well, again, we have the shorts that expire today. We are rolling them to March, okay? And we have the longs that cover them at 210 here and here. And then we have the 190 put, which we roll down at some point. And we have the 230 call, which we rolled up at some point. And so what we have left is the 220, 220, 220, 220, 220. And the longs expire in June and the shorts on March the 18th. Okay, leave it alone. I make sure that all gets filled before the end of the day. Let's go to WFC. Okay, and here we have February and March, and I already have my rollover prepared. I'm closing the February. And then in this case, if you believe that the stock is not going to 57.5, well, that's kind of close. Okay, so conceivably it could rally up at the end of the day and exceed this, so we need to do the entire rollover. We can't just simply sell calls because this February needs to be closed. We are too close to it, and conceivably the market could rally at the end of the day and then we get assigned, so we need to close that, and this is how much we're gonna get. Confirm and send. And that gives us $2,400 in credit, $24.21. Okay, you can see what I'm doing is rolling it to March 18th. Looks great. All right, I think that's about it. And nothing has gotten filled so far. Okay, so what we're gonna do is, starting from the bottom here, I'm gonna adjust so that it reflects more the current working order, working price. Cancel, replace, unlock it, and that will give me the 50. Confirm and send. And let's go to TER 145. So I again cancel, replace. In this time I'm going to go a little lower. Let's say 5 cents at a time. Then we have the UPS. And this is very close, so cancel, replace, and lower it 5 cents. And then keep doing that until they get all filled. Cancel, replace. 1, 2, 3, 4, 5. Okay, that's what I'm going to do for the rest of the day until they get all filled. That's all for today. Thank you very much for joining me, and I'll see you next time. Bye-bye.